Hey everybody, this is the Monster Maverick Show. I'm your host, Neil, Neil McSpadden, Neil McSpreadsheets, Two Castles, whatever you want to call me. I have I've earned many names over the years, apparently. But yeah, just call me Neil. And this is the show where we talk about all things Splinterlands, and not so much about gameplay or what cards to pick or anything like that, but more from the investment side, the earning side of play to earn, I guess. Taking all the assets that we have, mixed spreadsheets in the house. That's right. Taking all the assets that we have in the Splinterlands ecosystem and figuring out, what's coming next, what's the right move to make, if any, and all that stuff. So, and why should you listen to me? Well, I've been around a long time. I've been in Splinterlands since day one. I'm one of the OGs. I am as far as last I looked, I was still the largest single asset holder outside of Agrod and Yaba, which are the founders, and I don't count them because, they're insiders. So, largest outsider in terms of collection and just total asset base inside the game. And along with that, over the years, I've done a couple of different Splinterlands projects. I'm one half of the team behind X Chaos. That was a Chaos Legion launch pool where we took funds, got all the Chaos packs, and then we are taking the ongoing airdrops, both in SPS as well as in cards, and we are selling them into the market as we get them, and distributing the funds to all the X Chaos token holders. It's basically a DEC earning stream at this point. Did you see Matt or a guild bought 100,000 packs? No, I saw some chatter about it, but I didn't see any specifics about it. And then the other Splinterlands project that I'm involved in, which is pretty interesting, is the Venari Syndicate. That's my partnership with Vedev, and that is an old school syndication investment deal where it's all lawyered up, and it's a securities investment under regulation 506C, if you really wanted to know. So accredited investors only, and what we do there is, we take in partner capital and we deploy it into Splinterlands and, earn a yield, and, profits go back to the partners. Pandera saying XChaos, my main supply of DEC. Mine too, actually. I get, 40,000 a day, something like that, because I was actually the largest buyer of XChaos. So that's always fun. So, most people listening are not going to be accredited investors, so why do you care? Because if you bring us an accredited investor, you get a share of our management fees out of that. So, that might be of interest to you. But that's me in a nutshell. I've been around forever. I'm, wailing around and doing stuff in the Splinterlands world. And so, we'll go ahead and get started. And here is my theme song. I found out that I needed to do my little intro before the theme song because I was looking at my YouTube stats, and the when I start with the theme song, then the people who don't know about Splinterlands and just hit the video for whatever organic finding mechanism, they just plummet because they have no idea what we're talking about, and there's just me sitting there with the music going, and they click off. So the goal now is to capture their attention on the front end with the intro, and then we can lead them into the Splinterlands rabbit hole. So I don't know if it's going to work, but we're going to try it. So yeah, it's been a week. It's actually been 2 weeks since my last show because I had to actually watch my kids last week. but it has been an eventful week. Uh, yeah, need a splashy hook. SPS today. Stay tuned. Yeah, I definitely need some video editing polishing. If anybody is giving that service away for free, then I'll certainly take it. But yeah, so I was actually on Brybro's show last Friday, and he has a very similar theme. So apparently, so when I got the theme, I got it from Isaria, or Isaria, and she just gave me this thing, and this was before a lot of the other things have been developed for Splinterlands, because I used to run this show on MSP Waves back in the day, and so his music was apparently the official Splinterlands theme song, but it's been changed a little bit over the years, which I didn't realize. So I actually like my version better, but I'm certainly biased. But it was interesting to be hearing that. It's like, oh, that's a little different. So let's see. Gip is saying, can I say that Neil's show hyped me more up than the latest town hall? Well, I appreciate that. The town halls are great, but it's like anything where you have repeats. I help Cal with the Leo Finance AMA every week, and it's a similar kind of thing. A lot of times you get the same stuff kind of over and over again. So it's important for the newcomers to have their questions and issues addressed, but it can be a little repetitive, for the people who've been around for a while. Oh, Mike is coming in hot. Uh-oh. Let me turn that down a little bit. All right, we'll try that. Oh, I'm in the orange. I think I'm okay. So it has been a week. It has been an eventful, really 48 hours in the crypto markets. So there was a discussion on the Discord, I don't know, 6 days ago, something like that, where somebody was making the point that the crypto market does not really affect Splinterlands, because Splinterlands is its own thing, and it has its own channels of distribution and attracting new users and all that kind of stuff. And I got to disagree. And I think that the last couple days really proves the point of how Splinterlands is tied into the overall crypto market. So, if you've been living under a rock, then we can talk about how we've had basically major meltdowns over the last let's call it 48 hours. So let's go to the charts. Let's not waste any time. So this is Luna. Luna is Terra Luna is it's a Cosmos blockchain that has two primary tokens. One is Luna, which is the main asset, and the other is UST, which was a stablecoin. It's an algorithmic stablecoin, and this is going to come back to be important later. That we'll talk about. So, so the way UST worked was that I guess it still works ish. The way UST is designed, is probably a better word, is that if you are holding UST, it is backed by conversions to Luna, meaning that if I hold one UST, I can convert it for $1 worth of Luna, and then should I want to exit UST, I can then convert it into Luna, and then I can sell the Luna into some other asset. That works pretty well until other things happen, right? So, what what happened was that they started paying. They had this mechanism, and it was the shiny star in the crypto world, absolutely. And they were paying 20% on their UST balances. So if you had UST on the Luna blockchain or on the Terra blockchain, then you could stake it with a protocol. The main one was Anchor, and they would pay you 20%, which for a stablecoin return in the current market is really, really attractive. And so billions and billions of dollars went into UST. UST started growing and growing and growing and growing, and then we had a bit of a blip in the crypto markets. So people have been concerned about UST for a while, and there's been all kinds of writings about it. Say, well, what happens if the price of Luna goes down, and then you can't redeem You can't redeem your UST for $1 worth of Luna. And that is what we call in the biz a death spiral. So this has happened many, many times in the past with algorithmic stablecoins, which is what UST is. It's a stablecoin that is not backed by any particular asset. It is backed by an algorithm, and there's all different kinds of algorithmic stablecoins. DEC is an algorithmic stable-ish coin. It's not a true stablecoin, but it is algorithmically uh, bound. Let's say. So, so people were wondering about this, and so one of the things that they did, the people who were running Luna, Do Kwon and others, was they said, okay, we're gonna take some of our bag of Luna that we have on the side, we're gonna sell it to some VC investors, and we're gonna take those proceeds and buy Bitcoin with it. And they bought, I don't know, $1.5 billion worth of Bitcoin. Uh, and they said, okay, so now if you want to convert your UST, you can convert to Luna, or you can convert to our treasury of Bitcoin, and that will assuage any particular panic, and we'll be good to go. So let's look at what Bitcoin did over the last few days. And it went down, went from basically from 40,000 down to 30,000 in pretty much a straight line. And the reason for this is that, well, the stock market crapped on itself. The Feds raised rates. They went up by 50 basis points, which was expected. And initially on that news, the stock market rose. And then the next day, people were like, maybe not. And the market turned right around and has been crashing ever since. And we can see that in the SPY over here. So you can see it went up on this date back on the 5th, and then it's just been down, down, down ever since. It's been down, let's see, from 430 down to 400. So that's a 8% move in the last 5 days, which is a lot for a giant stock market index. Um, so the stock started cratering. Bonds went down as well, which meant yields went up. And so I've had this thesis for a long time that with the adoption of crypto by the institutions, by the hedge funds, by insurance companies have started getting in on it. Lots of companies are adding crypto to their balance sheets, especially Bitcoin. Um, what happens there is that if they face a margin call in stocks or bonds, then they have to come up with capital from somewhere. Where are they going to get that capital? They're going to sell their riskiest stuff first. And in these firms' cases, that's going to be your crypto, right? That's the least safe asset that they have. So they sell off that, and they use that capital to support their margin calls in stocks and bonds, and save their position over there. So that's all, is what it is. And the problem, though, is that crypto is still a relatively small market. Total market cap is like 1 trillion, 1.5 trillion. What do we got here? Total market cap 1.4 trillion right now. So in the grand scheme of global finance, that's not a lot. So when these guys start selling Bitcoin, it goes down pretty fast. And we saw some really interesting dynamics the other day where Bitcoin was going down, 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 and then 4 o'clock Eastern hit, U.S. markets closed, and then immediately Bitcoin rose, in response. So all the TradFi hedge fund guys, they closed up shop, and all the crypto buyers started coming in because Bitcoin was at 30,000, which is a pretty good support level. But that was not enough to save Luna. So Bitcoin's dropping down to 30,000. It's dragging the entire crypto market with it because, let's face it, Bitcoin is still the big dog in the room, and everything kind of follows. And and so Luna started dropping, right? So so we go back over here. If we zoom in, and there's some debate as to whether this was a coordinated attack on Luna or not. It doesn't especially matter, I don't think. But Luna started dropping, and at one point, Luna's market cap was like 23 billion, and Terra's market cap was about 18 billion, and then Luna's market cap started dropping, and it reached 18 billion in parity with UST. So now you have to ask yourself, okay, if I'm holding UST and I want my dollar's worth of Luna, there needs to be a dollar's worth of Luna over there to get, right? So people started realizing that this was a precarious situation, started selling their UST into the market. Because yes, you can convert, but you could also just sell your UST for something else. So the $1 peg started breaking a little bit, and I was in UST at the time, and it broke down to 99, and I was like, okay, I'm out. So I, I, I bridged my UST. I took it out of Anchor. I bridged it over to Polygon, and I sold my UST for USDC, and I took a 1% hit, which kind of sucked at the time. And then run. And then, the peg came back a little bit. I was like, oh, did I jump the gun? I don't know, but the situation still looks bad. And then the market on the Luna side, on the volatile side, still went down, and then it went below UST. Once that happened, well, the rest of this chart happened basically. So, um, people started converting as much as they could. There ended up being limiters in the Terra blockchain. Transactions got halted, bridges got stopped, and then panic ensued on the UST side. People just selling for whatever they could get, and it's been kind of stop and start ever since then. So if we look at the UST chart, this was stable, stable, stable up here, and then down to 60 cents, pump back up, and and then now it's dropping in. Now we're down to 83 cents or 80 cents of per Terra. But this is a compounding problem because as people sell for either sell into the market or they're converting their UST into Luna, they are then selling the Luna in order to recoup their funds, and that drives Luna lower and lower and lower, and the process just repeats, and that's what we call the death spiral. So yeah, I didn't get wrecked. It was a good day. That's true. I got out. I got out in time. 20% upside, not bad USD. I do think they will come back. I do think that they will, do some behind the scenes capital raises to shore up the thing. But if we look back at the market cap charts, so right now UST has $16 billion worth of market cap. There's 16 billion UST out there, and backing that is 8 billion or 8.5 billion worth of Luna. I think this might be an old. Let me refresh here because it's moving so fast. Let's see what we come up with. So UST is at 14.2 billion, and Luna dropped down. Okay, Luna's down to 6.5 billion. So somewhere the gap between 6.5 billion and 14.2 billion needs to be made up. Either UST needs to crash, somebody needs to come in and buy up the price of Luna, or somewhere in the middle. But right now it is not looking good. So I think this will wash out at some point. After there'll be a panic, Luna's probably going to go to $1 or something, and they'll be able to reset and kind of move forward on a more sure footing. So I'm actually looking to get long on Luna once all that happens and we see UST return to the peg. That's all to say, the market has gotten wrecked because there was so much money in this system, as a share of DeFi in general, that this one move has altered everything else. So this panic just tore everything down, and you can see on the 7 day moves right here. Minus 20% on Bitcoin, minus 17% on Ethereum, 18% on BNB, 24% on Solana. And just on down the list, everything's red, except for Tron. Tron's up 8%. And Luna's down 80%. So I guess that's what balances out. So the overall crypto market is not in a good place right now. We're seeing extreme fear. I've started legging in. I started buying some Bitcoin the other day. I bought some SPS, and SPS and DEC have not fared any better. In fact, I would say they have fared a bit worse. So let's look at the SPS chart. And SPS is here, down to 8 cents right now. And this is the 1 hour chart. You can see things were going okay, and then and went down. And I didn't get 6 cents. but I got like 7.8 cents. So I'm about even where we are right now. But I was one of the buyers down in this area here. Um, Gib has a good question. If all crypto is so correlated to Bitcoin, can SPS even outperform? And the answer is yes, because there's a difference between alpha and beta. And that's what we're going to get into here. Um, I think it is fair to say that the price of SPS is related to the price of Bitcoin. And we can prove it because we can look at the chart here and we can add a comparison to Bitcoin. And so let's add BTC USD. All right. So here, let's see. There we go. So here in this chart, we can see that the not the absolute moves, but the direction and the shape of the charts are pretty similar. We got a little bit of down sloping here, down sloping there. Then it turns around and goes up, turns around here on SPS and goes up. And then we start coming down. Bitcoin rolls over, has a little bit better staying power, and then rolls down, 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 down. And then we start to kind of even out, and this kind of evens out, and now we're going down, and SPS is going down. So that correlation is showing that SPS is tracking along with Bitcoin and along with the general crypto market. DEC gets more complicated because of the mechanics involved, but SPS is definitely a good proxy for the crypto market. So when it comes to the question of outperforming, we have to look at at alpha and beta. So in finance terms, alpha is uncorrelated movement. So if um, if Nike comes out and they release new shoes that have gangbuster sales, and they bring in a whole bunch of profit to the company, the stock price goes up, unrelated to everything else that's going on in the stock market, because there's a singular event involved with that particular issue, and that is uncorrelated with the rest of the market. So that's alpha. And that's really what investors are always trying to find. So there's a big website in traditional finance called Seeking Alpha, where people blog about their investment ideas and things, because everybody is looking to generate alpha. Beta, on the other hand, is a volatility amplifier. So if you have a high beta stock, then it's going to follow the same general trajectory as the overall market, but it's going to have more extreme moves. So it's going to rise higher and it's going to fall lower when the overall market moves up and moves down. So what we're seeing here with SPS is that it is a high beta token. It's our governance token. So at the moment, it's not generating a whole lot of alpha, but it is high beta. And if you are going from bottom to top, you will do better in a high beta token than you will in a token like Bitcoin, just because volatility is higher. All other things being equal, the higher volatility, you'll have larger moves percentage-wise. So, if you are an SPS buyer, which I am, I bought some, yesterday, then you are going to end up doing better, assuming that you catch, the wave up, and there is where you'll get your outperformance. On the flip side, though, is that if you're buying at the top, then you are going to outperform to the downside. So, Bitcoin went from plus 40% down to minus 30%, so that was like a 70% swing. But but SPS went from plus 186 down to negative 79, so that's a 250% move, to the downside. So it outperformed, just in the wrong in the not so desirable direction. So the question is, will SPS generate alpha at some point? And is it worth buying, at any particular, point in time? And personally, I think the answer is yes. And we will get into the reasons why in a little bit. But I did want to hit Pandarus's question. So do they even testnet these damn things or implement them while at the bar where Johnny piped out? I have this algo. Is the big companies, et cetera, buying crypto basically making crypto arbitrage into the dollar? Sir, I don't know how to explain what I mean. I don't know about arbitrage, but they are, I think they are pretty conclusively selling their crypto for fiat in order to fund their fiat positions. But yeah, as far as the algorithm goes, it's actually a pretty standard algorithm. So The conversion mechanism is one that has been around for a long time. So, Steam backed dollars (SBD) and Hive backed dollars (HBD), which operates on the Hive blockchain, is exactly the same thing as UST. You have a basically a debt token, and you have a conversion mechanism, in and out to redeem the debt in the base currency. Uh, uh, Waves and USDN works in the same way. So, this actually got me thinking a lot about HBD because HBD does have this same mechanism. If a lot of people start buying HBD and HBD is paying 20% now, like Terra was, um, that could present issues, right? And On the Leo Finance stream earlier today, we were actually discussing this a bit. And I think HBD is actually a good deal safer than a coin like UST or USDN. USDN has had depegging events as well in the past, so where it's gotten down to 60 cents or something like that. HBD is a little bit better in that sense, in that they make it harder. So the design of it is that instead of having instant conversions, you have a 3.5 day window of conversion. So if you're holding one HBD, you convert it to Hive. It takes 3.5 days, and what they do is they take the average, or it might be the median price over those 3.5 days, and that's the ending amount of Hive that you get. So that actually really discourages conversions because there's a great deal of market uncertainty during those 3.5 days. Because if your median conversion price is higher than the actual price at the end of the 3.5 days, you've lost that spread in the conversion. If it goes the other way, then you've benefited and you end up with more than $1 worth of Hive. But if you're in a stablecoin, if you're a stablecoin investor, then that whole process is just unattractive because I want exactly $1 out of it. And that's the whole point of having a stablecoin. So that's one factor that makes HBD less attractive and then less susceptible to a death spiral like this. And the other part is that there's a debt limit on the Hive blockchain. So right now it's 10%. It's I've been told that with the next hard fork, it's actually going up to 30%. So how we said that the with UST and Luna, it was 18 billion against 24 billion, and then the 24 billion became 18 billion, and then they had a problem. So by having a much lower debt limit, then it makes that potential problem less likely. So at 10%, the Hive coin would have to crash 90% in order to have that kind of liquidation event issue where it creates a death spiral. At 30%, it has to crash, 3.3 times in order to get to that same level. But those are all moves you will probably see coming. Hive at this point is I mean, it's not a huge market cap, but it's big enough that seeing a 67% decline, you'll at least see coming, and you can potentially get out of your HPD position um, at that point. So those are the two main mechanisms that Hive uses to prevent this kind of death spiral situation. And it's so far it has it's been obscure enough of a coin that it hasn't really mattered. But with them paying 20%, with the Leo Finance launching their HBD pool on Polygon, that may change. It may become a more widely known coin, which could benefit Hive in terms of token price and all of that kind of stuff. That actually makes it it's a bit of a double-edged sword for Splinterlands, because attracting attention to the Hive blockchain overall, of course, those new people to the Hive ecosystem will see Splinterlands as the largest dApp on the chain, one of the largest dApps in the world just in general. So we could see some potential influx from that, which would be nice. At the same time, creating new accounts becomes that much more expensive. So the you can create Hive accounts in two ways, where you cannot pay three Hive, or you can use your resource credits in order to create a new free account. And the resource credits deplete and then replenish and deplete and replenish, deplete, replenish, as they are used. So if Hive were to go to some of these crazy prices that people talk about, $10, $20, whatever it is, that could be a real pinch on Splinterlands, creating those accounts for new people. But that's a problem I'm willing to take, especially since we're not paying for it. But we definitely want to make sure that Splinterlands retains the ability to create as many accounts as is needed. So so here, I mean, this I guess this last 20-minute spiel, I guess, is all about how um, Splinterlands is tied in to the overall crypto market, especially through the SPS token. Now, if you've been around for a long time in the Splinterlands world, like I've been, we've definitely seen ebbs and flows in the market attention and new users coming in with the overall crypto cycle. Splinterlands launched in a bear market. It ground. I don't know. It muddled along for a long time, and then as crypto started to get hot again, interest started picking up, and we started seeing more people, and people were searching for crypto apps and finding crypto gaming and play to earn and all these kinds of things. So the overall sentiment of crypto definitely affects Splinterlands as well, but it's more indirect because there's account growth and then like number of accounts growth and the actual NFT values. And obviously, by being non-fungible, it's hard to get an exact feel for how the market is changing because one card may be in favor, while another card may be out of favor. It's all it's grunt. So that's a little bit harder to pin down. But here at SPS, because it's a fungible token, because it's on Binance Smart Chain, it's on Crypto.com, it's on Gate.io. It's actively traded and liquid. We can see the really tightly bound effects of the general crypto market on SPS. So then the question is DEC. What are we doing with DEC, right? So DEC is an algorithmic stable-ish token. I wouldn't even call it a stable coin because it's clearly not stable. We saw it go from, point, 60%, 40% of its, par value. I don't even call it a peg, it's a par. And then it went up to 15 times, its par value. And it was designed to stay around one thousandth of a dollar or 1,000 splintoshis, as we like to say. And it is algorithmic in the sense that more DEC is created as the price exceeds par value, and I think less DEC is created as it underperforms. But then there's a secondary mechanism where the the redemption of DEC into Splinterlands is honored at that 1,000 Splintoshi level. So what that does is that helps firm up the floor. So if you have 1,000 DEC, or let's say 4,000 DEC, you will always be able to, well, I say always, to date, you have always been able to redeem those 4,000 DEC for a pack because that's equivalent to $4. So if you can go out to the market and buy those 4,000 DEC for less than $4, and you are of the mind that you want to buy a Splinterlands pack, then that's free money, right? So you go out, you buy 4,000 DEC for whatever the price is, $2.38, and then you go and you buy a pack with that. Now you've effectively captured, $1.62 out of the Splinterlands ecosystem by performing that arbitrage. So that creates buying pressure on the bottom, of the floor of the par value, and we've seen, over time that has worked decently well. Before the SPS pump, not true. What part is not true? So the one of the things that changed. So before SPS, that was the mechanism, and we saw that it worked fairly well. Um, we saw DEC get down to, I think at the lowest it was about 40% of the par value, but over time it kept kind of bouncing up and down and bouncing up and down and bouncing up and down. And when Splinterlands assets became more attractive, it closed that arbitrage fairly quickly. And when Splinterlands assets were not as attractive and people weren't buying as much, we saw it drift lower and lower. And Samsonite says, 45, so 45% of the par value. I used to have charts, but I haven't updated those in a long time. So, with SPS, and the airdrop, then the price of DEC went insane. And I believe I'd have to check with Yabba, but I believe they did remove that par value. But from what I understand in the chatter that I've seen, as actually in Discord today, Yabba said that it will always be backed by Splinterlands assets. So I think there's going to be some kind of redemption mechanism on into the future. And you want to see the sheets? Let's see. Do I have? These are old, but see if I can actually find my DEC sheet. Gotta scroll through all my tabs. DEC production. Nope, that's not it. This is burn DEC. Yeah, I don't know. Part of the problem with my Splinterlands sheet is that it has so many tabs I can't actually find anything. Is Matt even real? Price list sheets. Yeah, my price list sheets are old too. So, so all that is to say that DEC is a complicated beast. I am curious to see what kind of changes that Yeba has hinted at over the past couple months. To the whole mechanisms. We do know that we are getting more supply. We're gonna have the modern ladder and we're gonna have the wild ladder, and they're going to have two separate DEC pools. So they're going to be increasing supply. DEC, of course, can be used in guild buildings. It can be used. It's going to be used in lands. We know that. But the goal is always to balance the sources and the sinks in order to keep that par value roughly in line. Is Matt even real? I don't know. He only shows up for town halls once in a while now, so it's hard to say. But but I did want to do. I basically that whole thing was just showing that Splinterlands is affected by the overall crypto market, and significantly so. It's not just a passing passing influence. It's a significant influence on the overall ecosystem. When SPS launched, it was at the perfect time. We were seeing tons of growth in Binance Smart Chain and in Polygon and a lot of these EVMs, and governance was hot, DeFi was hot, and when the token launched, we saw it shoot up here to about $2, and then the inflation started to kick in. So speaking of inflation, I don't know if you guys saw, but the the inflation just got decimated. So we had the last private investor payout, which was this cliff right here. So if I can go back to the cumulative SPS, no, that's kind of what I want. But if we look at the raw numbers, so what this sheet is my reworking of the SPS white paper with some assumptions. So we have these different areas where SPS is generated and sent out into the market. So we had the private sale, we have the airdrop, we have the DAO, we have the team tokens, we have partners and advisors, play to earn, SPS staking / LP / oracles, and then we come out with a total. So what I did in this chart is that originally in the SPS white paper, and it still shows this way, all of that kind of happened all at the same time. Now what we know in practice is that did not all happen at the same time. We still are waiting on the DAO. We're still waiting on play to earn. We're still waiting on node oracles and those. Private sale is now over. So that's 20 million SPS that is gone. And that is represented by this cliff going down right here. And airdrop is ending soon. We have let's see, today's day 288 out of 365. So what is that? 65, 75, 77 days left. Isn't play to earn tournaments? No, play to earn is the is player staking. Tournaments is, when they take in, so tournament funds come from, Splinterlands coffers, where they take in, well, they used to take in DEC, now they take in SPS, and they recycle that into tournaments. So that is not from, core inflation of SPS. Um, so what I did was, I made the assumption that, okay, after the airdrop ends, DAO is gonna kick in, play to earn is gonna kick in, and we're gonna get, and the nodes are gonna kick in. So it's looking like the nodes might actually be more delayed than what is in this chart. That might be more like, November, December, rather than right after the airdrop ends. But we're in the ballpark, with these assumptions. So what we're seeing is that monthly SPS inflation is going from 10% a month down to 6.4% a month. So it's a 36% reduction in inflation, and that's a lot, So SPS is going to get, on a relative basis, going to get scarcer, going forward, and this is um, a significant break point now that the private sale is over. Land will also get SPS rewards, right? I actually am not sure about that. I don't know what the plans are exactly for lands, and it'll be way down the road in any case. And then once the airdrop ends, then we're going to cut another 20% from 6% monthly inflation down to 5% monthly inflation. Um, and so yeah, so if you are somebody who looks at the supply side of SPS, it's decreasing rapidly. And this breakpoint that we're at here is going to end up being significant. On the demand side, there is there's nodes coming up, there's Rift Watchers coming up, um, and those are probably the two biggest near things that will affect demand. But they're going to suck up a lot because Rift Watchers, we don't know any pricing, but we do know it's going to be only purchased by I think it said SPS and vouchers. I'm not sure. We haven't seen any details yet on how exactly that's going to work, but it's going to suck up SPS out of the market along with vouchers. And we know for nodes that we have the tranche pricing from pre-sale on through tranche 7. I expect that I think pre-sale and tranche 1 are going to sell out pretty quickly. And that's going to be whatever it was, $5 million worth of SPS. Now the total market cap of SPS is 63 million. So 5 million is 8%, something like that. But in terms of liquid SPS, what's available in diesel pools and in on the exchanges and on Binance Smart Chain or Ethereum is going to be some fraction of that. I actually haven't looked at the the actual liquidities of those, but it's going to be less, because there's only so much in the total. So, taking out $5 million out of those liquidity sources and effectively burning them, because some is going to be burned and some is going to go into the DAO, is going to be a demand shock for SPS. So, the problem with all of this, of course, is timing, right? Because ideally, you would want to buy SPS right before everybody else buys SPS in order to get into all these other things. So, it's debatable when the right timing will be, but I'm starting to leg in, So, I earn my airdrop, I stake all that, or I put it into liquidity pools, and for the first time in a long time, I've started putting new capital into SPS, just to buy a little bit, here and there, to accumulate a position. Because I think that when supply cuts and demand goes up, then that's a recipe for rising prices. I just don't know where the bottom is, right? Because we could drift lower here in the bear market in crypto, for a while, and it could have a significant impact. This 8 cent SPS could very well turn into 4-cent SPS before any of that happens. Let's see. Warrant says there's 6 million SPS in the land expansion. I'd have to look at that. I don't remember seeing that, but it says, "Hi Neil. Given the game seems to be large sale leaseback transactions via cards, what cards do you think you could rent with the best return, and what levels? Also, do you think it's wise to buy cards to rent given prices may fall into August? Finally, is there any asset you would buy besides SPS?" So that's a bunch of questions. But yeah, so you can look on the market. It's actually really easy to see, what is renting and what is not. You go to Peak Monsters and you look at various collections, right? So right now, rewards cards are doing really well. Chaos rewards, and let's see here. So if we look at I don't know, pick a rare, and you can look through the different levels because obviously level 1 everybody's renting for point 0.1, but you can look at I'm not even showing my screen. Okay, let's go to the other scene. You can go to you can look at the different levels and kind of see what the ROA-B is, and rare goes up to 8. If you look at level 5s, you can see ROA is 70%, 98%, 95%, 102. And then if we go to level 8, we can see 42. So this one not doing so well, Naga Assassin on the max level, but the other ones are you have a slight gain here in overall ROAs compared to the level 5s. So you have to work through that, and you can look at the different levels and everything. But I can tell you, as a class, Chaos Legion rewards are doing pretty well because so many people are dumping them for lower prices compared to what they could rent for, that the returns are actually pretty good. But the other additions and subsets, it's you got to look more carefully. Do I think it's wise to buy cards to rent given prices may fall into August? So it's a good question. It really depends on your overall outlook. If so, we're in the last third of the season right now, and the rental prices escalate over the course of the season. The question you have to ask yourself is like, okay, what I want to think about is the overall season average rental value. Because having 200% on the last day, that's great, but it's only going to be a fraction of the total for the whole season. So you have to look at it on an overall season basis, as whether that if I buy this now and it's renting at a certain level, knowing that it may decline, as more rewards cards are printed, or as more Chaos Legion packs are released, or bought and opened, then is that return worth it given that risk, or do I want to maybe dollar cost average and buy in a little bit at a time? So it's definitely an individual decision. I know for myself, I am taking my rental earnings and I'm buying more cards every season. So Venari Syndicate is buying more cards, basically weekly. But we have those same concerns. As prices deflate with overall crypto interest, as well as particular inflation within Splinterlands, then we want to be part of the market, but we don't want to shoot our shot too early. So we're just dollar cost averaging in. And is there any asset I would buy besides SPS? Well, obviously I'm buying Bitcoin. So I have a large position in the tri-crypto curve pools, where it's stablecoin, Bitcoin, and Ethereum. So it's like 2/3 crypto, 1/3 stable. And through the nature of liquidity pools, as the price of crypto drops, I'm buying more and more automatically, which I actually like quite a lot. Do I think the new rewards changes will affect the rental market? Yes. I don't know how though. So we are getting these new rewards structures. We don't know what they are exactly yet, but we do know that this something for nothing gravy train is ending, which I think is a good move. So people complain about the bots and all that kind of stuff, but really the problem is getting something for nothing, where you can buy just a summoner spellbook for $10, get a bunch of ghost cards, put like 1 BCX of actual card into it, and start earning DEC and card rewards and all that kind of stuff. So that is an exploit because it's not proportional to the stake involved, whereas everything else in the game is. So by fixing that uh, that exploit, then hopefully the bots and the large scholarship players and all those kind of things respond in the desired way, in that they instead of going wide and operating 100 accounts or whatever, they combine that into or fewer strong decks, and then they'll be part of the overall gaming ecosystem where they are earning whatever they're earning, but they have put the stake into um, to count for that, I guess. Agrid has said many times over the years that he thinks of Splinterlands as a combination of proof of stake, proof of time, and proof of skill. And it's common, and you need all three to do really well. And if you only have one or two, then you could do middling okay. And by closing this proof of stake exploit or loophole, then we will be putting everybody on the same footing, which I think is what most people actually want. But will they actually respond that way? Will cards just get dumped on the market? Who knows? I hope that the bot operators, respond in the way that we hope, which I guess is a bit redundant. Hoping that they do what we hope, but it is the desired outcome. But it remains to be seen. I mean, we certainly need all the details of exactly what's going to be changed in order to make any kind of informed decision. Um, SPS demand shock given how much is outstanding, or is it safe given how much SPS is locked up? Well, the lockups are locked for a month. It's a 4 week, 25% a week power down. So the lock stake is fairly locked, I would say. So the people who are going to be using SPS for nodes and for Rift watchers are mostly going to be getting it from the market at that point, because the airdrop's going to be over. So it's either people's already existing stake, already existing wallet balances, or they're going to be buying on the market. So I think it's going to be a significant buying pressure. But before we run out of time, I do want to hit my weekly snapshot. And let's go back to the sheet. Let me go to ecosystem value. So this is my sheet where I go through and I look at all the different tokens, alpha pack tokens and plots and SPS and DEC and alpha cards and promo cards and all that kind of stuff, and we come to a number. And the number is down, unsurprisingly. So here we can see that back on April 19th, we reached a peak, and the actual number was 289 million. Now we're down to 239 million. So a significant pullback over the last 2 weeks since I had a show. And a good chunk of that is just over the last 48 hours, because SPS and DEC, which make up a lot of the so here's SPS right there, and then DEC is smaller, but a chunk. So especially so the shrinkage in SPS was a significant hit to the overall ecosystem. We went from 82 million down to 61 million. So that's 20 million of the, what is that, 40 million. So half of the market contraction in Splinterlands ecosystem value was just that. Good morning, hello. I think I'm new to your stream. Well, welcome, Butt-Ops. This is Splinterlands TV, and following me, I think it's Dave L22 is up next, I think. So you can stick around for that. Yeah, Dave L22 is next. So yeah, we had a large contraction in SPS, and then Hive also took a dive. Not to be too rhymey. So most of the other things like any of the alpha tokens, the track tokens, the chaos tokens, those are all priced in Hive on Hive Engine. So when Hive drops and there's no trading because these are fairly illiquid, then the market cap of those things shrinks right along with it. So we saw alphas go from 1.6 million down to 1.2 million, even though the count actually only changed by two. So somebody bought or somebody opened two alpha packs, over the last 2 weeks. And did they buy those? Well, actually, no, they didn't buy them. They already had them because the price was actually in Hive terms was the same as it was 2 weeks ago. But the dollar value of those went down from $246 to $187 because Hive dropped. So all those factors combined, has shrunk the Splinterlands ecosystem by $40 million over the last 2 weeks, and like I said, a good chunk of that over the last 48 hours. So yeah, it's definitely an impact on everything, and there's the wealth effect that if you guys followed Ben Bernanke back in the '08 crash days, he was talking about trying to engender wealth effects, but the reverse is also true. When our perceived wealth drops, we feel poorer. I certainly feel poorer, over the last couple of days because the number I look at on my computer has gone down quite a bit. But overall, still $240 million. That's a good chunk of change, for a game that was created by two guys a few years ago. With basically a desktop and spit and polish. So it's pretty damn good. I never thought I would really see the day when we saw these kinds of numbers. If you go back to early Monster Maverick shows like 2 years ago, you can find me saying stuff like, "Well, imagine what would happen if we had 20,000 players," and we would just go straight to the moon, and we have, which has been really gratifying to see. And but that was all launched on the back of SPS because SPS attracted attention from the wider crypto community, and they are now a part of it. And GameFi Play to Earn has certainly taken off over the last year or two, and we are beneficiaries of all of that, which I'm pretty grateful for. So I need to tell you something important about Splinterlands. I love you. that's good. Good to hear, Binjay. We all love the Splinterlands world and most of the people in it. I won't name names, but most of the people in it. So I will say that if we look back at the alpha cards and on there, promo cards took quite a beating. They went from 13 million down to 9 million. Alpha's pretty solid, beta's pretty solid. Those don't trade very much because they're so high priced. Chaos Legion dropped from 17 million to 15 million. Dice went from 6.8 to 6.3. So the real ones that got hit were promos and rewards. So if you're looking to pick stuff up, those are probably places you want to look as far as additional cards to add to your deck. And the Chuni is asking, do you really think we have 20,000 real persons playing? Oh, sure, absolutely. We've got 100,000 people in Discord. People over exaggerate the number of bots. I think that they think is in the ecosystem. It's a lot, but it's nowhere near as much as people think. There's certainly some large operators that have a lot of accounts, like 10,000 accounts kind of thing, but there's relatively few of those. So Binjay's on holiday. Well, I hope you're having a good time. So yeah, there's certainly more than 20 real persons playing, and yeah, so I'm not actually concerned about that at all. Now, don't worry, Neil. Don't need it. I always need more packs. I'll always take more. But one of the promo things that is going on with Splinterlands TV is some hosts are going to be able to give away packs, so that'll be fun. Something to keep an eye out for in all the streams on Splinterlands TV. So like Davel 22 coming up next. I don't know if he's one of them or not, but something to be aware of. Anyway, that is our show for this week. Thanks everybody for coming, and we'll be back next week, same time, same place. Check Splinterlands TV for the schedule, and we'll catch you next time.